How are you guys doing today? Welcome back. Today is February 24th, 2022. I usually have a more goofy intro, a more happy intro. I'm not in a bad mood, but I just think out of respect for Ukraine and the markets today and all that's transpiring, it's important to put this show and everything in a context. I think what I do here is great. I think everything I do here is educational, it helps people. But I think that with the markets being choppy and being rough, I'm going to take today's episode and switch it up just a bit. Nothing crazy. We may do it more often given the markets being goofy, but we're going to do sectors and indexes today. The reason being, there's plenty of folks who already do this on YouTube, but I think that for folks who watch me and trust me and want to have another unbiased source, well, I'm here for it. If you want the 8 picks for my swing watch list and my day trading watch list, those are for my Patreon folks, my Discord folks, description box down below. They still got those today. But for the video, I want to try and focus on this. Again, the reason just being in good faith of always promoting good educational content, good stock market content, good investment content that folks can relate to. Individual picks make it kind of choppy. And so what I like to do in these kinds of markets is go macro. I talk about this in my course all the time. That when things get choppy, I like to expand out. Reason one is that if I have only 15 things to worry about, the 4 indexes, VIX, which I don't trade myself, and the 11 indexes, I only have 15 things to worry about, the 11 sectors and 4 indexes. I can really focus on those 15. Secondly, I'm insulated from risk. A bad day for an index is like -2, -3%. That's a terrible day for an index. Usually they're up 0.8, up 1%, and it insulates me from the market's horrible choppiness and gives me more specifics. So we're going to be discussing the 4 indexes and the 11 sectors in this video today. If you enjoy this content, a like, a follow, subscribe really does help, as I'm a smaller YouTube content creator, but does mean the world to me. With that being said, check it out. I usually do the awkward eye contact thing. Not today. Let's keep it more serious, more focused on the content today, out of respect for what's happening in Ukraine. I just don't want to be that kind of guy today, like nothing's wrong, because again, I'm very privileged, very happy to be here, but I don't want to make fun of or in light of tragedy, actually nothing bad's happening. So let's have respect for that. Get in today's video, talk about the 15 things I want to talk about, and get this bad boy rolling. Again, thanks for being here. Let's get into it. So first is the S&P 500. This is important to note. We have a question to ask ourselves with the S&P. Right back to my dumb face. Firstly, how much of the bad news that we have is baked in, right? Is the Russian invasion truly baked into the price now, or does it have farther to drop? And with the Fed hikes coming and Fed rates coming, are we truly baked into that as well, or do we have a lot more room to drop? That's a $1 million question. Who really knows? So with that being said, here's what I'm looking at. We have consistent lower highs, consistent lower lows. We had a nice bounce today. Super nice at this top line. I wouldn't really call this a support though. I mean, you had one close to it. It's a pretty arbitrary spot where it turned around at. That's a bit concerning, but again, I'm not overly surprised here. On the 1 year, 1 day, with our indicators turned down real quick, right, you like to be above the 10 EMA line. That's when you have your best melt-ups, your best runs, bounces off the 50 beautifully, right, and of course over the 200 is what you want to see. We're still below all 3 EMA lines. You don't want to see 10 underneath the 200, but nothing overly concerning. You know, great values across the board. With the stochastic in particular, every time we bottomed out so far on the indicator, almost immediately, every single time it does that, you basically find the bottom, right? I mean, I'm not going to say we've found the bottom because anyone who predicts the bottoms is an idiot, but we can see we have very good consistency with the stochastic bottoming out. Same with the vortex bottoming out. It seems like we found some form of ground here. What we also know is that if you check the volume, these 2 green candles are huge volume. So that's a really good sign as well. I don't even know where support's going to be at. I'm thinking 4,100, this range will be good. And then, of course, resistance, it's hitting this spot right here as we speak. Bada boom, bada bing. Hitting right here right now. Not showing much life after hours, which is fine. What are we going to do and where we're going to go from here? I think there's a good opportunity to break this resistance and kind of get back on the bull over this resistance trend line. I also think getting over the 10 EMA line on the 1 year, 1 day is pivotal. Until we have those 2 things, I'd say I'm neutral and cautious. You have that dance you have to take, the little swing dance of, is this a really good value based on technical analysis and based on fundamental analysis, or is this just a rally where folks bought the dip but institutions are much more worried and they'll continue to sell? So I'd keep your wits about you. Overall, I think it's fine. It's an okay support, but I'm not really overly convinced we're rushing in here. Wild day, down 3, up 3%, huge swing. But overall, I do want to see closer to $4,100 to enter, or I want to see a little bit more life. But overall, S&P, who knows where it's going. This is absolutely wacky, and I think if you are super concerned, being sidelines does make some sense. Let's check the NASDAQ. When it comes to the NASDAQ, it's much the same. Lower highs, lower lows. And when it comes to support here, you have a more solid line of 13,000 on the dot here is really strong. If that breaks 12,500 is also very strong. It likes to go towards hold numbers that end in 00. So we see it holding here fine and holding here fine. When it comes to the 1 year, 1 day with their indicators turned on, again, you're below the 10. You have your best days over the 10, best days over the 50, especially the 200. So waiting for a 10 cross, I mean, it's fine, but I wouldn't go buck wild if I saw that. Again, with the stochastic and our RSI bottoming out, when you cross beneath 40, almost every single time on that move, you can see the next few days have usually been very consistent. I can put my cursor here all across the board here. Every single time we cross beneath 40, you have a few good days of trading here. So you may have some form of bull run here that looks really good. Vortex bottomed out, RSI is low. So across the board, NASDAQ is much the same. You have to ask yourself, is this a good support? Is this a good value? Or am I getting duped here? And again, position sizing and patience will pay off for people who do so and plan as such. When it comes to just looking at our chart again, resistance, we're looking at 14,000 on the dot here basically. Break over that, maybe we see some higher highs eventually and some higher lows, but again, it could go either way. NASDAQ here, I like what I see. It could be lower. Good end of the day, but again, it's so choppy, it would make me nervous. Let's check the Russell 2000 together. With the Russell, I mean, you could argue that we have a double bottom forming here, which is nice. I had the support map from earlier, but if we do hold 1892, that's a really good sign. But again, if I were to zoom out here, this is so concerning. I mean, you're going sideways and then boop, 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 real low. But again, if this double bottom does hold, that's a great sign. I don't think this is much of a support. You can see this candle right here at 1878. That's kind of what I'm looking at. But I mean, overall, this is not a strong support by any means. There's nothing in this area that would dictate for me to think that previous price action is going to help us here. When it comes to our indicators, we can go to our daily snacks here. Let's see. I mean, it's more volatile than the other markets, which is nice to see. A 10 cross is fine, but again, over the 50 is what you want to see. The 50 is a really strong resistance in this time frame. And once again, if I can use my tool here, under 40, almost every single time does help us kind of find some form of bottom across the board. It lines up pretty well with some really good reversals. Again, timing the market's an idiot's game, but I mean, if you can use indicators to better suit your opinions and help you have confidence in trading, that makes a lot of sense. You may see a vortex cross here, a 10 cross. You may get a good few days here. It is bottoming out for what it is. I don't love the support came from almost nothing with consistent lower lows. But if we do see some higher lows and higher lows, higher highs and higher lows form, I'll be pretty happy. Overall, I mean, small caps have gotten the absolute shit kicked out of it. I mean, that's down from 2,400 down to 1,900. That's a strong 24% pullback. I mean, that's not an accident. They're getting the shit kicked out of it. So I mean, it's a good sign we have some life. I like this double bottom, but again, just like the other indexes, I think there's something to be said about pumping the brakes, patience, and really picking your entries will pay off for those who do so. And I also think neutral plays make a lot of sense here as well for like credit spreads and such. We have folks in my Discord talk about that. Check that out as well. Let's check out the let's check out the Dash YM, the Dow 30 real quick to wrap up our indexes. When it comes to our Dow 30, I hated to see this. This was holding so well at 33,000. It broke down to 32 and some change. Now again, it came back, but now what I'm worrying about is that this old fantastic support area right here is going to be a mondo resistance now, right? We had such problems getting over 35,000 previously, and then 36,000. Now I'm thinking this may be a huge resistance for us. We're going to have to see what happens. All right, let's see what happens here. But overall, it's fine. It's an okay deal. But if you show me that this is a chart for an individual ticker, I wouldn't be that excited to enter it, honestly. 10 crosses again, over the 10. Really good EMA crossovers lead some good life here. Over the 50's best. All three are far away. You're looking at possibly a death cross here, which would not be fantastic at all. But again, look at my cursor vertically. All right, every time it hits -40 on the stochastic, it has a good chance of reversing or at least finding some form of bottom here. The difference is these bottoms were found over the 200. These bottoms over here were found under it. So there may be a difference here. Vortex low, RSI is low. So if you like to buy into value, this seems to be a good value. Again, I do worry that with the Dow 30 here, our real support is at 32 and 30.5. I think there's a strong chance here that we're going to see 32 again, if not 30, or even 29.50 once again. There's not a strong support here, but of course, if folks buy in fundamental news changes, you may form some kind of support and keep on moving. Overall, not great. Not the worst thing that ever happened, but I'm not very excited about that either way. Let's check the VIX real quick. So when it comes to the VIX, if we're below 30, that's a good sign. But I mean, we had this massive gap here. And on the VIX, 360-day 4-hour, which I always use, gaps like to be filled. That's what it always does. Historically, every single gap on almost every single time frame gets filled on the VIX one time or another. Like over here, came down, boop, gapped up perfectly, and came back down. Gapped here, boop, came up perfectly. We had this massive gap. You knew it was going to get filled eventually. I don't know if it was going to be today or in this week, but it got filled. All we have left now to fill is this tiny baby one. It's tiny, right? This gap right here needs to be filled. It's not much to write home about. I don't think you even probably notice it on any time frame. You see right there is a tiny gap. That's it. It's coming down, but look, we have consistent higher lows on VIX compared to like historically. It's usually been lower lows and lower highs. Of course, it's an index that sets itself. Technical analysis and VIX don't always go well together, but it's important to know we've had higher lows. The last time that happened, historically, it really shot up and it really took off. And I mean, yeah, the COVID run up. I mean, it's not a great sign overall. I think with VIX tomorrow, if we can see it beneath like 28, 27 really coming down, I'd have a lot more confidence. If the VIX spikes, which it's tending to do so over 30 the VIX does do one of these bad boys. If it starts with that, I would get worried and sit on my hands. So I think tomorrow, if it's me, I'm watching foreign markets, Japan, Germany, I guess you can say Russia. You can watch those right now. That's pretty biased though. Watch those markets. If they're doing okay, it's good. If they're doing bad, I would worry. And then tomorrow morning, I'm starting with the VIX as my first spot to look at. Then the S&P, NASDAQ, Russell, ending with the Dow 30. With that being said, I have 11 sectors I want to talk about real quick. These are much more applicable. Let's check these out together. First, basic materials. So XLB, first off the bat, is a really nice support play. I think XLB across the board here, at $78 is a great entry. Now, 80 is a small support. I wouldn't call it that. I don't think there's any real reason to think that this is a support area where it bounced at today. I think it just gapped down, filled that gap perfectly. See how I said gaps like to be filled? And filled that gap perfectly today, and then we'll see what happens from here. I think it's a fine purchase. It's an okay purchase. I think that you're in the middle versus resistance and support. So I think you should take that into consideration. And as we move forward through this episode, if a lot of the indexes, which were in the middle of supports and resistances, and the sectors in the middle of supports and resistances, that's going to give me some caution on which direction it's going to go. What you could do, and I think it's what's going to show, is that if there is support and resistance above and below or in the middle, you can plan directions. You can plan, hey, I think tomorrow if it goes up, I'll do this. If tomorrow's red, I'll do this. Don't plan and try and time the market. Have plans for both directions. Whatever comes to fruition, take that. So I think materials here is fine. It's okay. I think, again, at 39, at 38, it's a much better deal. But overall, XLB looks pretty good. Let's look at XLC together. When it comes to comm services, a nice move today. Again, though, it filled the gap nicely, and now it's hitting resistance. A strong resistance historically. All right, even this area from like here to about $68 and some change is a strong resistance area. I think buying at 63.30 is a much better choice. Even waiting for a pullback to 64.50 is a much better choice here. I think that this is a weaker sector. If you check the RRG graphs, lower lows, lower highs, it's just coming from a massive uptrend nicely, and it's overcorrecting now. It's coming back down to earth. So I think XLC is okay, but I think if I was going to choose a stock sector to play tomorrow in the next few days, XLC is not doing it for me. When it comes to XLE, we are topping out. What we can see is a gorgeous, and it's not perfect, all right? Only thing perfect here is my cat, and I'm second place to him. And the only thing that's beating that is that it is really nice higher lows and higher highs. I pointed this out earlier that with XLE, you run up, and then what? You consolidate. You run up, you consolidate. See how you ran up nicely and then you kind of went sideways for months here, right? You could see from over here, for 212 days, it just went sideways. And of course, you had chop in there, but you went sideways. Ran up, sideways, running up, and now we're starting to curtail here. Energy's at a very strong pivot point here. If energy does in fact get boosts from Russian oil prices going up, pushing a solar, EVs, whatever comes through, it could break through and keep going. But I think when it comes to risk versus reward here, anyone could see these nice higher lows, nice higher highs. I think up here it's a bit overbought. I think it's 64, 62 for this regression line where a lot of price action respects this line too, or at 58 makes a lot more sense. So I'm not bearish on energy by any means. I think if you're going to buy any sector for day trading, this is where to look. But energy at the moment for investing in sectors, to swing trade sectors, to really insulate yourself, actually is a bit overbought. But I think if it does pull back a little bit, it's a really good deal. It's a great momentum trade. I think overall it's a great sector, but it's a bit high for me personally. When it comes to financials, I like what I see. Okay, this is a broadening falling wedge, right? You can see that pattern playing out here, where you can see it's getting lower lows with the same high. These are interesting patterns for two reasons. One, they're not very common. And then two, whenever you have lower lows but the same resistance, that's a breakout pattern. What you're expecting to see happen with this is you want to see a move up to like from 41 to 45, pull back, and then take off. That's the usual pattern for a breakout for these kinds of plays. And again, it's not the greatest thing to ever see of all life. I think XLF at 37 is not very appealing. 37.70, not very appealing. It lowered 36.50, even 36.20 is great. If it falls to 34.80, I'm much more intrigued by financials. Now, there is an argument to be made with XLF that if the Russian banks get shut down and that cash flow stops, it could be good or bad. I'm not going to be Mr. I know everything, but we did lock up trillions of dollars of Russian assets. That could be a really good sign for banks getting, extra money. Maybe the refugees, they come here and they spend money on Brits and that can transfer. It could be good or bad. Do your research, right? I have no idea. Don't act like I'm not gonna act like I have tattoos and piercings and I teach high school economics. I don't know the implications across the board consistently. But $37 I know is a good deal. So if this does pull back another 1 or 2%, I'd be happy to enter. If it makes a big move up and retracts, that's also a great sign to buy in towards the middle here. So XLF, I'm good on if it comes down just a bit more. XLI looks a lot like XLB, but it's dropped here and hit our volume profile line and bounced nicely. I don't think this is a good support area. I mean, it's there. Okay, it's there. But you can see it's pushing resistance, again, towards the middle of resistance and support here, going for a breakout. Over 97.4, you're going to have a good time. Right below that, you may be seeing 90. So industrials, it's in limbo. It has to be above like 98 for momentum or below like 92 for value. So I would just play XLB over XLI, but I think it's a fine looking stock sector. It's just not doing it for me. I think it's just too far from anything, and I don't want to play that, in my opinion. Next is technology, lower lows, lower highs, matching QQQ pretty well here. What is nice is the nice move today, made a nice move up. Now we can see 147 again being a support, right? We had this before. I thought we lost today. I was like, oh shit, it's over, boys. We came down. This is a nice support area, 139, 140, right? It got close to that, reversed, made a nice move up. So maybe we retest 147. Maybe we try 143, 144, make a higher low, keep this bad boy going. But I think overall, again, XLK in the middle of resistance, above support, below resistance. Nothing great here. I'm sure for like day trading and swing trading individual stocks, it's fine. But I think it's like XLI. It's too far from anything. I'm not that interested compared to others and opportunity cost. Next, XLP, I like a lot. Consumer staples I actually bought today at 72.50, I believe. I'm already in, and I'm up 1.5%. Boom! No, it's not that impressive, right? It's just not that great. But again, this was a very clear play. Old resistance area, right in here. Old support area, and we're in the $72 range. Great trend up. It came down and tapped perfectly. I said I'll go for it. I was gonna hold for about 2% risk. It's up now. I'm happy with my choice. Could you buy in now? Sure. I don't think it's a bad idea. I will mention that I think that 74 is going to be a slight resistance here. It never has been a resistance before, but old supports like this become a resistance. So I think these wicks are going to show us there's not really any volume at the $74 range. There isn't any volume. It just keeps moving out. So we're either going to gap up quickly or we're going to come crashing back down. So this is definitely the most technically strong besides XLU that I like to buy in today. So I bought in XLP. It looks pretty good. I think it's better lower or a bit higher, but overall XLP looks pretty good. XLRE, again, is pushing resistance. All right, if we get a nice move tomorrow, break out, have a good time. Hopefully you can see above 45.50. That's your next resistance. It's just like XLI. It's just like XLK. It's in the middle. I'm not interested. I think REITs are on sale. That's a great sign from here. Like O is on sale, big fella. All right, this is a great dividend stock that's on sale. DOC is on sale. All right, these REITs are on sale. You're getting banana pricing for really good real estate. So you may see real estate's low and you're like, oh God. But when it comes to the dividend stocks, a lot of REITs pay off. This is when you want to act on those. So I would have to check out some dividend stocks at the moment. This drops farther, I'm just going to get happier. The lower the real estate is, the better for those kind of plays. But overall, again, higher highs, higher lows. Broke down. Now we're seeing some lower lows. I don't love what I see. XLU is the second stock that I bought today for a sector. Look at this. All right. That's gorgeous. Oh, my goodness. That's what technical dreams are made of. Strong support right here is a nice cushion for me. Great trend higher. Oh, my goodness. I bought an XLU, I think, around 64 and some change. It filled that gap perfectly. Would I buy it now? No. The reason, again, being resistance is here. Support's here. We're in the middle. It can go either direction. Could you go long here? Sure. But I think we have a chance of hitting like $66 and then breaking back down. Obvious lower lows, lower highs. But overall, it's a fine play, a bit lower or a bit higher. XLV Healthcare is a fine support play. A bit lower, but again, resistance here, support here. I want to buy it lower. If you do see 125, great deal in XLV. And then XLY is much the same. Resistance and support, lower lows. What am I getting at here? You could easily day trade, swing trade, long-term invest, and have a great time. But I think what you need to remember, and this is from the course that I've taught, is risk management is your foundation. Technical, fundamental, mental support's your wall. Macro markets, which is huge here. Goal setting, running a trading plan, and consistency is your roof. If you don't do those 8 things, you're not going to have a good time. You may need to adjust your time horizon. You may need to shorten it from swing trading or elongate it from swing trading. You may need to go from scalping to long term. You may have to go from equities to shorts. You may need to go from calls to puts. You may need to change your strategy. But no matter what happens in this market or any market, your 8 golden rules, your floor, 4 walls, and roof never change. Those 8 things will never change. So make sure, for me, it's going to macro markets and minusing and minimizing my risk, playing a little bit less here, and just trying to beat the market and stay green if it goes red and cut my bag soon. So that's it. I hope that helps. Again, if you want the 8 swing plays, day trade plays I've made for my Discord, check them out. It's in the description box down below. It means a lot to me. Either way, stay safe. Hopefully Ukraine and all that works its way out. I'm hoping it's okay. It is what it is. All I can do is I have a degree in education. I'll just keep giving that as much as I can. Y'all have a good rest of your guys' night. Please stay safe, make good decisions, and we'll see you guys next time. Thanks.